Hey everyone, welcome back. Today we're diving into something huge, the so-called Great Reset, pushed by the World Economic Forum, and why a former insider says it was built on one of the biggest financial scams of our time, ESG investing. You might have heard whispers about the WEF and their plans to reset capitalism after crises like 2008 and COVID. But what if I told you a Wall Street veteran who helped build this system now calls it a fraud that misled investors, jacked up energy prices, and funneled trillions into bad bets? We're basing this on a bombshell interview with Desiree Fixler, a former sustainability chief at Deutsche Bank's asset manager, DWS. She blew the whistle on massive greenwashing and paid a heavy price for it. We'll fact-check her claims with real data, add context from regulators and markets, and break down why ESG is collapsing right now. Buckle up, this one's eye-opening. Desiree Fixler isn't some outsider conspiracy theorist. She's a seasoned investment banker with over 25 years on Wall Street, roles at JP Morgan, Deutsche Bank, and more. In the 2000s, she was actually helping pioneer ESG, which is environmental, social, and governance investing. In Stakeholder Capitalism, ideas heavily promoted by Klaus Schwab and the WEF at Davos. She thought it was about making finance more responsible after the 2008 crash, but when she joined DWS as Group Sustainability Officer in 2020, managing trillions in assets, she saw the dark side. Fixler claims funds were slapped with ESG or sustainable labels without real evidence, no proper data. Just marketing to charge higher fees and attract cash. DWS boasted hundreds of billions in ESG assets, but internally, it was smoke and mirrors. She raised alarms, got ignored, then fired and smeared. She lost her job, work permit, and had to rebuild her life. Sound dramatic? It gets real when regulators stepped in. Fixler's whistleblowing triggered raids by German police in 2022, investigations by the US SEC and German BaFin. The facts back her up. In 2023, the SEC fined DWS $19 million for misleading statements on ESG controls, the largest greenwashing penalty ever for an asset manager at the time. Then in 2025, German prosecutors hit them with another 25 million euros for negligent infringement on sustainable claims. DWS CEO resigned amid the chaos, and they slashed their claimed ESG assets from over $900 billion down to around $115 billion. Authorities confirmed widespread fraud, exactly what Fixler alleged. This wasn't isolated. Greenwashing crackdowns are ramping up globally because trillions flowed into these funds on false promises. So how does this tie to the WEF? Fixler says she helped build a framework that became Stakeholder Capitalism, Schwab's big idea from the 1970s. Rebranded post-2008 and during COVID as the Great Reset, the pitch moved beyond just shareholder profits to serving stakeholders, society, environment, everyone. Sounds nice, right? But Fixler argues it got hijacked. Regulations, especially in the EU, made ESG mandatory, forcing net zero targets, DEI hires, and trillions into renewables, often unprofitable ones. Critics call it top-down control, eroding meritocracy and free markets. Fixler links it to higher energy prices from diverting cash to green projects while underinvesting in reliable sources. Real data supports parts of this. EU net zero policies contributed to energy crises, with wholesale gas prices spiking 5x pre-pandemic levels at peaks, hurting households and industry. Europe's deindustrialization is real. High energy costs driving factories elsewhere. On DEI, mandates distorted decisions, and some studies show mixed economic impacts, with backlash leading to rollbacks in 2025. Fast forward to 2024 to 2025, ESG is in freefall. Global sustainable funds saw inflows halve in 2024. Then record outflows $8.6 billion in 2025 Q1 alone, per Morningstar. U.S. funds bled $19.6 billion in 2024, with closures and rebrandings skyrocketing as anti-ESG sentiment grew. Trillions was diverted, but many into losers, contributing to economic drags like Europe's high energy bills and job losses. Fixler calls for repealing mandates, returning to evidence-based investing. Regulators agree. More fines, stricter rules on greenwashing. Look, The Great Reset sounded utopian, fairer capitalism, fix climate, inequality. But according to this insider, backed by fines and market data, it became a vehicle for fraud, elite rebranding, and policies that hurt everyday people. Higher bills, lost jobs, underperforming investments. Is ESG dead? Not quite, but it's on life support amid backlash and reality checks. What do you think? Was this a well-intentioned idea gone wrong, or something more calculated? Drop your thoughts below. Like and subscribe for more deep dives. Thanks for watching. Stay curious.